Welcome to Gold Silver Pros, where you'll learn the ins and outs of the gold and silver markets. Searching for the best precious metals deal? Our affiliates are of the utmost trust, quality, and highest customer service in the industry. Shop with our trusted partner, �モ𝙁. Access special deals on silver, gold, and platinum through our website or call 307-264-9441.
Hey everyone, this is Rob Keens with 𝙂𝙂𝙊𝙇𝙀. I've got a very special first-time guest on the program. It is Jorge Ganoza, who is the President, CEO, and Director of Fortuna Silver Mines. He is one of the co-founders of Fortuna in 2004. He currently serves President and CEO. He's a geological engineer who has worked on mineral exploration, mining, and business development projects throughout Latin America since the mid-90s. Before founding Fortuna, he worked in business development at senior levels for several private and public junior Canadian mining companies operating in Central and South America. He graduated from the New Mexico Institute of Mining Technology here in the United States and has been a director of Ferry Corp from March 2017 to July 2020. Jorge, how are you doing today?
Very well, and glad to be here, Robert. Thank you.
Yeah, thank you for joining the program. We appreciate it. We've had our eye on you for a long while. You guys are producers in the gold and silver space, but you're also doing a lot of project expansion as well, which is why we wanted to talk to you about that today. I think investors are really looking for companies who are advancing their projects. And this is kind of the space that, we wanted to introduce to our investors as well. We know that they're looking for shovel-ready projects or projects which are already producing. You definitely have that. Jorge, before we get started on talking about your projects, I did want to talk about the market just a little bit in terms of what you're seeing in the space as a developer and a producer. From your perspective on the precious metals, is this really a positive environment for you running the company in terms of price and economic fundamentals, or what's the environment like for Fortuna Silver right now?
From the fundamentals of commodity prices and the commodities we produce, gold accounts roughly for 70% of our sales today, and silver 20%, and we have about 10% byproduct lead and zinc in our revenue. Prices are at a level where we manage to keep healthy margins. Or EBITDA margin, we are operating the business with an EBITDA margin of around 40 to 45%. This second quarter of the year, it dipped slightly below 40%, but traditionally we're running the business in this price environment in 40-45% range. So you must be able to make money with $1,700-1,800 gold, right? From an all-in sustaining cost perspective, you must. We are seeing inflationary pressures. Those are real. Okay. Absolutely, we all feel the pinch at home or in a construction. But we're managing, and we're keeping the margins of the business healthy. Our lowest cost operations are running at around $1,100 per ounce, all-in sustaining cost. Now, what I can say is that something I haven't seen before is such a disconnect between commodity prices and equities, right? That's something that I've been in the business for a few decades now, and I haven't seen such a disconnect between equities and the commodities we mine, right? I've been in bad markets before, but gold was trading at $300 or slightly under $300 per ounce, and equities were in the tank, and that made sense. But with the type of equity prices we have, commodity prices we have, I think the equities have gone down just with the entire market, right? We all have higher expectations with respect to precious metals. But our business here is to make sure that we provide investors with a strong call option on those expectations on higher prices. No? we need to run a business that is sound and thrives at all sorts of price ranges. No? So that's what we are putting together in Fortuna, a company that represents a good, strong call option for our investors.
Yeah, and in that call option, we often refer to that as a leverage play on the metals in the equity space, because a lot of times, Jorge, the results that you'll get when you have gold rises $100, a lot of times on your balance sheet in terms of cash flows, that means more than just maybe a 1/18th increase in price, because that extra $100 for you could be pure profit. And that's where we get the leverage in the mining stocks is once you get to the point where you're mining above cost, every extra dollar you get is amplified in your share price more than it is if you just bought an ounce of gold or silver.
Yes, and we all love mining equities for that. And but again, we are always long. If you're a miner, you're always long, right? So here we need to make sure that we put together an asset portfolio and run a business that can perform and thrive throughout the precious metals price cycles, right?
Yes,
that's very important. So to be able to perform, and you know what, you have to be disciplined, because we always get a lot of pressure to grow when prices are peaking. When in a business like this, you have to be counter-cyclical. Really, the time to grow is when prices are down and assets are cheap to acquire, and constructions are cheaper to execute. But we are usually pressured by investors and market in general to grow when prices are peaking and freeze everything when prices are down. When in reality, in a business like this, you have to be counter-cyclical. And Fortuna, we have grown our business successfully, and we've always been try to be as counter-cyclical as we can, right?
For sure. And I think anybody invested in precious metals, I think we typically tend to see ourselves as contrarian investors or counter-cyclical investors, because the reason we get in is typically when the other markets aren't doing as well. Commodities markets tend to do a lot better. Certainly, if there are pressures in the world with economies and things like that, precious metals tend to lead that space, because people are looking at them for their stability, and they're looking at them for, keeping value in the face of financial storms. So certainly we see some of that going on around the world, and we think, gold and silver as a result are going to get a lot stronger. In particular with silver, I wanted to ask you a question. Silver is much more industrial use than gold. We know it's used in basically everything. In terms of silver, do you see that being a little bit different from the perspective of, it seems as though we're using more than we're mining at some point? Jorge, do you think that's going to be a boom for the mining sector for those that have silver? Because I don't know that the shortage could go on forever. I think the Silver Institute has us running annual production shortages of over 100 million ounces for now 3 years in a row. At some point, you would think that silver would reprice to reflect that. Does that play into your expectations moving forward of how you do your mining plans? Or do you just go forward, according to, like you said, we're going to be long on both the metals?
We love silver, and we love silver because its capacity to explode at times, right, in price, driven by what you explained. No, silver, unlike gold, is consumed. Inventories are usually running tight, and when investment demand comes, it slingshots silver prices, right? But if you look at history, those things happen. When silver goes up, it goes violently up. But I go back to this concept of the precious metal cycle, and so we have to be here and through the down cycles when silver underperforms gold, and try to benefit also those legs of the cycle when silver outperforms gold. Silver has been underperforming gold for some time now. I do agree that the current silver to gold ratio should narrow significantly. But when that happens, we will benefit certainly from that, and we prepare ourselves for that. But we are equally committed to gold and silver. Today, silver is about 20% of sales, but we continue pursuing silver assets. The conundrum for a silver producer is how to grow your business, keeping silver at or above 50% of revenue, right? As you see, most silver producers, when they grow, they end up undoubtedly reducing their silver contribution to revenue. You have Pan American Silver, an iconic silver producer. Silver doesn't account for more than 30% of revenue today. Fresnillo, the largest silver producer in the world, is primarily a gold producer more than silver. First Majestic, a company that is in our peer space, last year acquired a gold asset in the US. So as you look to expand, quality silver assets are a scarce commodity, and that's precisely to your point. No, that's why not a lot of silver. Silver can be easily squeezed, and when it happens, prices just show a lot of volatility to the upside, right? But again, we like to be positioned for those days, but we're running the business every day. So we're always long silver, gold,
Yeah, I think you make a really good point, Jorge. As a miner, you can't just mine when silver price is up or gold price is up and not mine otherwise. It don't really work that way. With the capital intensive business that you have and the labor intensive business you have, you pretty much need to run 24/7 or at least most of the year.
And to add to that component, our responsibility to stakeholders, right? Mm-hmm. Mining has changed significantly over the last decades, no? And it continues to evolve, and we continue to be measured against heightened standards. So when you run a mine, it's not something that you can just turn on and turn off. We all have a big responsibility that we all take very seriously with stakeholders, government, neighboring communities, or employees. So you cannot just turn on a mine and turn it off. No, there are environmental implications, social implications, government relation implications, mm-hmm. That need to be brought into the picture. So that just puts, as I said at the very beginning, heightened standards to the business and to the vision that we can have with respect to how we develop and operate assets for the long term, right?
Yeah, I agree with you. And it's a good point that you brought up about an ecosystem. Miners don't exist in a vacuum. They have to work with other people. They're outside parties, governmental officials, and other considerations. And I know that you guys, in order to get your mining permits, have to go through an extensive process in saying how you're going to serve the community, the types of programs you're going to have for environmental, social, and governance, and those types of things. So that, a lot of times I don't think investors understand that, but it's a really good point that you make. It's something to consider. You guys apparently have done a very good job of that, because you're building during a time at which the precious metals have been sort of sideways for a while. Can you talk, Jorge, a little bit about your projects and why you chose them, and give us a little bit of detail on where you're producing and what your next steps are?
Yes, Fortuna has operations in two premier mining regions, Latin America and West Africa. Mm-hmm. In Latin America, we operate mainly in the Andean Cordillera throughout, from Mexico all the way down to Argentina. We have three mines, the San Jose mine in southern Mexico, the Caylloma mine in southern Peru, and the Lundero Mine in northern Argentina. All those are, gold and silver deposits in a Cordilleran type geologic environment. And in West Africa, we operate the 𝙎𝙀𝙾𝙆𝙎 mine in Burkina Faso. And we are, by now, little over 70% complete with the construction of what will be our fifth mine, and I believe a flagship asset for the company for years to come. That is the Séguéla construction, right? So we are a company with, strong, with big diversification, a large footprint in two premier mining regions. I'll share with you and your audience something that you might not be aware. If you look at the size, if you group those geographies in West Africa that encompass Ghana, Burkina Faso, Ivory Coast, the gold production regions of Mali, which is a big country, but just the gold production, and then Senegal, Guinea, if you draw an outline around that gold producing region, it is the size of the great state of Texas, no? And that area alone produces about 380 tons of gold annually, and making it the largest gold producing region in the world. That region alone produces more gold than the entire continental United States, Australia, Canada. No, is by far the largest gold producing region in the world, such a small region. So to some, West Africa might sound like a far and away place, but from the perspective of mining, it is a premier mining jurisdiction where it's a place where mining has matured significantly over the last years. You have all suppliers, engineering companies, service providers, equipment manufacturers, technical support. So from the mining perspective, it's a great place to be. And that's why you find companies like Barrick, Newmont, AngloGold, Endeavour Mining, and other very successful B2Gold, other very successful companies expanding their business there. No? So we are part of that growth story. And we manage our business focused on those two key strategic regions for the precious metals business.
I'm glad you brought up West Africa. We'll talk about one of your projects here in just a moment, but I wanted to make a point for people. When you're looking at resources in the world, the continent of Africa has almost an unimaginable amount of different types of resources. The United States companies have been over there working there for a long time, specifically in oil, but also the metals. But you also have China coming in with their Belt and Road Initiative, connecting a bunch of economies, and they're establishing ports in Africa. So Africa is becoming this almost a melting pot of places where, in a way, it's almost like the next China. China for a long time was where companies went to build products and to use resources. Now I feel like that's kind of shifting. China and Mexico wanting to elevate their middle class. And a lot of what we see production-wise, certainly from the commodities, is coming from different areas. West Africa has been big. I know the oil companies like Exxon have invested billions and billions in properties over there. And so it is, like you said, a great resource producing region. Can you walk us through this project? We were talking earlier about Séguéla there in West Africa. Tell us a little bit about this one.
Séguéla is so far a success story. Let me start by saying that, a little over 2 years ago, 3 years, almost, Séguéla was a 400,000 ounce resource. Today is a mine under construction with 10 years plus in reserves, which is going to produce, over 120,000 ounces of gold annually for the initial years, with a robust internal rate of return, that hovers anywhere in the high 40s, mid 40s. A strong payback, and we're 70% complete with the construction. Ivory Coast, Côte d'Ivoire, like we call it, it's a great place for mining. We take the responsibility of developing one of the newest mines in the country very seriously. And it's going to be a centralized mill sourcing ore from different pits. We currently have 5 different ore bodies: Ancien, Antena, Kula, Agouti, and a new one called Sandberg, which is not part of our reserve inventory yet, but it's a recent discovery as well. So, our construction capex budget is $173 million for a mine that's going to produce in the initial years, between 120 and 150,000 ounces gold. We are 70% complete. We are on time, on budget, and our estimated planned date to deliver first gold is mid-2023. So we're coming, fast to that, to New Year. This year is almost gone now. And we look forward to having this mine join our production portfolio. It's going to be a low-cost producer. Our estimated all-in sustaining cost is below $1,000 per ounce.
That's really, really good. I think the average is closer, maybe $1,200-1,300 right around the world. So you guys are on the lower end of that.
And again, it's going to be a flagship property operating for 10 years plus. We announced earlier this year a new discovery within the Séguéla complex. It's called Sandberg, where we reported our maiden resource of 350,000 ounces of gold, and mineralization remains open, continues growing. So we have over 40 prospects within the 30-kilometer stretch of the productive rocks that control mineralization. So we have a commanding land position, and with 40 targets that need to be tested. And so we have years to come of exploration work to continue unlocking value and harvesting the portfolio there, right?
Yeah, that's really interesting. And you mentioned, I think you said 150,000 ounces. I just did a quick calculation. That's about $275 million at current gold prices. So, and that's not considering the potential cost, potential rising values of gold, which I think a lot of us believe gold's going to do a lot better. So yeah, that seems like a really good project. Talk just for a few minutes about the rest of your projects. So you're certainly not just working that when you've got other ones going on. So give us an idea about the rest of your portfolio.
Yes. So moving on to Burkina Faso, there we operate the 𝙎𝙗𝙃 mine. 𝙎𝙗𝙃 is a mine that's been operating since 2016. It's an underground mine. We currently mine around 6 grams of gold per ton. It's a mine that's coming to the end of its reserves for the next 2-3 years. But it's been a good source of free cash, and it continues to be a good source of free cash that is helping us fund the construction of the Séguéla mine, which is going to be the future of the company, right? We have exciting exploration opportunities there still that we're pursuing. So, even though our reserve inventory at the 𝙎𝙗𝙃 mine looks a bit tight, we are excited, continue to be excited about the exploration opportunities that the property presents to us, and we'll continue to pursue them, right? Then moving on to LATAM, in Mexico, we have the San Jose mine, which is our main silver producer. Fortuna currently is producing around 6 million ounces of silver annually, and 5.5 million come from this one mine. It's a sizable underground mining operation. 3,000 tons per day is the average mill capacity. Our all-in sustaining costs hover around $14 per ounce. We've been operating that mine since 2011. when we brought it into production.
Okay.
Going on to Peru and Argentina, we have 2 additional mines there, and the Lundero operation in Argentina, in the province of Salta, is the one with the longest reserve life. We have roughly 15 years, considering resources, 15 years of life of mine at that asset, and is currently our lowest cost mining operation at around $1,100 per ounce. Right.
Okay, and is it that's the Lundero mine? Let me put that up for people. Let's ask a question. You said this is one of your bigger projects. So what in particular makes this one so important to you? Is it just the amount of ounces you have? Is it the cost, or is it you think you're going to get more production here from anywhere else in your portfolio?
It's a combination of things. All of our other deposits are vein deposits.
Mm-hmm.
This is a gold porphyry, so it's a different animal. It's large tonnage, low grade, but it's a porphyry. It's a massive deposit. We mine it through bulk, open pit mining methods, as you can see there in the picture in the slide. It's a large open pit operation where we heap leach the ore, and our estimated annual production for this year out of this mine is about 123,000 ounces of gold at an all-in sustaining cost in the range of $1,100. So very competitive. And we do have exploration opportunities around it. In fact, we're pursuing one now, which is called Arizaro, which is a twin porphyry system only 3 kilometers away from where the mine is, within our property package, right?
Okay.
So, yeah, exciting exploration opportunities there, and we're pursuing those. No?
All right. So turning over to your financials, you guys have recently announced your Q2 financials. How did those turn out from your perspective, and how do you think the market has reacted to your performance this year?
Yeah. Before talking about the financials, I would like to stress something. This is a business that first is driven by physical delivery. And what do I mean by that? You have to deliver the ounces to see them in your bottom line, right? So up to the first half of the year, we have produced 129,000 ounces of gold and 3.3 million ounces of silver. So those ounces that I just mentioned, which is our production for the first 6 months of the year, are right in the middle of the fairway with respect to what we guided at the beginning of the year for 2022. So we have delivered the metal. With respect to cost, we provide cost guidance within a range, and we have delivered costs for the first 6 months of the year within the range of guidance, right? So we are meeting our expectations with respect to what we guided in the first 6 months of the year. So we, in the second quarter, we have shown strong EBITDA, or EBITDA came in at around $58 million on the back of $168 million in sales. We generated strong free cash flow in the quarter of around $22 million. Now, our net earnings, or net income, came in at $2 million for $1.7 million for the quarter. That was below analyst expectations, but you know what? We managed to log a small gain in the period in a quarter where most of our peers were deep in the red. So, our net income was impacted by a write-down of value in some of our stockpile inventories at the Yaramoko mine, and just by some pricing effect, all of our silver is sold in concentrates, and prices through the quarter from April to June declined $3, and zinc prices declined from $1.90 in April to $1.45 in June. So when you sell concentrates, you get paid on a provisional pricing that's adjusted at the end of a period. So, our income was impacted by those negative price adjustments because of the declining prices and the negative inventory adjustments at the Yaramoko mine for stockpiles. So, I don't want to get it more and more complicated, but, in spite of all of that, we were able to show a small gain. And, but again, what's important is strong free cash flow, healthy EBITDA, on the back of robust sales at 168 million. So I am quite happy with the way the assets perform. No?
Yeah, I think that's great performance considering the fact that gold and silver have been sort of a sideways movement. Silver is probably down a little bit this year. Gold is about the same as it was. But I would say this, Jorge, a couple of positive things. You guys are making money even in a tough environment, but gold and silver haven't sold off as much as the rest of the market. I mean, if you look at stocks and Bitcoin and rising rates on bonds, I still think the gold and silver market have done fine. For me, it's the equity space. The equities are underperforming, but they shouldn't be based on results like that. You guys had positive results in a tough environment. To me, that tells you stick within those equities because they're underpriced. If you guys can do well in this environment, you're going to do really well when gold and silver goes up, and you're just going to be increasing your cash flow and your net income. What would that do for you if we just speculate here for a moment? If we approach 1900, 2000 in gold again, and maybe we get closer to $30 silver, how does that change, your impact to investors?
Again, $100 in the gold price, assuming gold, silver move in tandem, $100 in gold price represents for the year around $40 million of income to us, right?
Yeah.
So I think a bit of I like to think, I've been in mining for 4 generations. My great-grandfather, my grandfather, my father, myself, we're 4 brothers, 3 or 4. So I say that I've been long precious metals for 4 generations now. So I think what we're seeing is investors, I like to think of them as distracted. Now, that's how I rationalize what's happening. Because with the inflationary pressures that persist, the geopolitical tensions around the world, is not just Ukraine and Russia, and potential consequences spilling out of that conflict. It's also the US and Taiwan and China and all of these tensions around the world. I think to many of us, it's surprising that gold, as you were saying, gold has done quite well against other asset categories. But I think we all believe that looking at all of this picture, it should done much better, right? So, I think just investors have been distracted. Distracted by what? I think, for example, what happened with crypto, which burst, and some argue it has some room to still go down. I'm not an analyst or on that matter, but also on the theme of the electrical revolution, no? Some of the valuations that we see on some of the car vehicle producers or manufacturers like Tesla and those valuations, and what we're seeing with some of the commodities that are necessary to support that revolution, no? Like lithium prices, nickel prices. So I think a lot of funds have been distracted out of gold and precious metals. But I believe eventually fundamentals are here to stay, and everything circles back. I remember in 2000, 2001, investors saying it's the end of gold. It makes more sense to buy and store water than buy gold. That was in 2000, 2001. So I think long term, medium term, even short term, I'm confident that we'll see the resilience of precious metals there, because it clearly has a strong role in portfolios.
Yeah, I totally agree with you on that. I do think, given what's going on in the world, people definitely expect the metals to do better. What I notice on my end is people aren't necessarily getting, from a retail or a stock investor perspective or a fund investor perspective, you don't see people coming into SLV or these ETFs or these other proxies for silver or GLD for gold. So the generalist investor hasn't really caught on, but I agree with you. The fundamentals are lining up to where it makes sense for gold and silver to rise. And given all this, given what's going on this year, to me, it was just a panic event. It was a liquidity event. People were getting out of all markets because that's what you do, when you need liquidity. I do think that money is going to come back. I think it'll rotate back into the precious metals, and we'll see the growth that everybody's expecting. But again, just to reiterate, what I see in the equities market for gold and silver is all you guys are underpriced. And not only that, Jorge, I haven't seen it this cheap in the precious metals equity space since I've been doing this. And when I look at the charts, I go back 30 years and I don't see where it's this cheap relative to money that's being made, relative to the price of gold and silver, relative to the rest of the market.
I launched this company when silver was trading at $3.80. And I completely agree with you. The valuations that you see on the mining equities just don't correlate with the underlying price of the commodities or metals we produce. So there has to be that needs to come in balance at some point, and I fully subscribe to the concept of higher precious metals. Yeah, absolutely.
So Jorge, I think we're going to be seeing each other next week. We'll both be up in the Spokane area at Silver Symposium. You guys will be speaking, I believe it's 9:30 on the 30th on that Tuesday. So definitely, for those of you in my audience going to see me at Silver Symposium, stop by and check out Fortuna Silver there, where you'll be able to speak to the company in person and view their presentation. And Jorge, I look forward to seeing you there as well.
And Robert, thank you for the opportunity to speak with you and your audience. Thank you very much.
Absolutely. We love you guys. You're a producer. You do silver and gold. I mean, it's what we like. And, I think in this presentation, it would be pretty clear to investors, you guys did really well in a tough environment. So I think tremendous amounts of upside for you guys because you navigated that so well. And, think if you're interested in the mining space, Fortuna is definitely a company you want to look at. So thank you so much, Jorge, for jumping on the channel. We appreciate it.
Thank you.